Markets are in absolute turmoil today as Trump gets serious about replacing Jerome Powell and the dollar hits a 3-year low. Couple this with consistent calls for rate cuts, despite the fact that Jerome Powell seems dead set on not providing them, and betting markets have it at an 85% chance that they won't come. All of this is driving Bitcoin dominance to a new cycle high, and we are finally presented with one of the final bosses of the Trump tariff trade war, which is the topic of today's video: capital controls. Today, we're going to talk about something that has not yet been part of the discussion, which is what will happen to assets if the Trump administration adds capital controls to their already historic tariff-infused trade war designed to isolate China. The goal of this video is to understand what capital controls are and why even a whiff of them coming into place has driven up the demand for both gold and Bitcoin, all while stocks have continued to tumble. That's right, capital controls might actually be the catalyst to send Bitcoin into its first ever safe haven narrative-driven pump. So today we're going to understand exactly what's happening, and then we're going to walk through what capital controls are, what they might mean to assets like gold, Bitcoin, equities, and altcoins, and what exactly these capital controls might end up looking like under Trump. Again, the importance of understanding this before any of this happens is paramount, because once capital controls go into effect, it might be too late to react. If this ends up happening, which we don't know for sure yet, but it certainly feels that way, this video will be one of the most timely and useful videos on this channel. So I'd appreciate it if you hit that like button, as it really helps this information get out there in the YouTube algorithm and help more viewers. First and foremost, let's talk about the markets. Right now, the US dollar is hitting a 3-year low, something we actually predicted would happen and something that we believed would be good for risk assets. However, the circumstances in which it's hitting these lows are anything but ideal, at least for stocks. And that's because Trump is actually rattling the Federal Reserve. His actions that we talked about putting that old case, Humphrey's executor versus the United States, in front of the Supreme Court for reevaluation, that introduces the possibility that Trump will be able to unilaterally fire Jerome Powell, something that experts across the spectrum, Bitcoin lovers, conservatives, liberals, you name it, everyone believes this would cause extreme market turmoil if it happens, likening it to ripping out your smoke detector because it's beeping too much. Let's be real though. We've all done that. Couple this with the fact that Trump really wants rate cuts, but the data is actually not supportive of this regime lowering inflation, not yet. And so Jerome Powell has been steadfast that it's not an environment that he wants to cut rates in. So the markets are betting that Jerome Powell is going to stand his ground here against Trump and not cut rates. Meanwhile, Bitcoin dominance is trudging to new highs like an absolute freight train, showing that it is currently embodying the flight to safety, at least in the crypto space. But it's important we realize something happened in the charts yesterday. That's right, out of nowhere, we had one of the most explosive green candles on this trip back from the range lows to the range highs. Now, I've been telling you, we are in a range-bound market, which is going to lend itself to more trading than investing and holding. But what we see here is that for now, Bitcoin is bouncing off the range highs, almost perfectly so. This was when tariffs were first announced back on Liberation Day on April 2nd. And since then, the market has gone into a complete collapse and it's pushed all the way back up. But the mere whiff of capital controls, something we'll be talking about today, has exploded Bitcoin right up to the range highs. And it all comes from this tweet right here, which is from Donald Trump, where he says the golden rule of negotiating and success: he who has the gold makes the rules. Thank you. Gold hit an all-time high after Trump said, "He who has the gold makes the rules." Now, according to one of the best traders on crypto Twitter here, Path.eth, he said veiled threats of capital controls and the not unlikely hijacking of the Fed will severely damage the dollar. Bitcoin will hit my trading view target, but will be cemented on the wrong side of history. Let's not get too far ahead of ourselves with targets and history here. Let's just first understand, if this is a veiled threat of capital controls, what does that mean? Well, saying that if you have the gold, you make the rules is another way of saying the rules that currently exist might not be the rules that we follow going forward. And that's what led people to believe that Trump is hinting at changing the rules of how international trade is happening. As a Bloomberg article from November actually hinted, tariffs and capital controls were very likely to exist in tandem. According to the author, Trump simply cannot have both tariffs and an escape from the strong dollar unless he considers the capital account, and that would be a game changer. In fact, Zero Hedge brought this up on Tariff Day, Liberation Day, that what's coming next is capital controls. We're going to get to exactly what capital controls are, how they work, and what it could mean for our assets. But first, I wanted you to understand on a very simple level, if capital controls become a real narrative, digital gold is going to stop being a meme real quick. Now, we showed this tweet before, but as Good Alexander said, everyone is so obsessed with the equity crypto correlation, they miss the essential difference. Equities are a bet that we are going to earn our way out of our problems. Cryptocurrencies, which have no earnings, bet that we will print our way out along with yield curve control and capital controls. So essentially, we're entering into the narrative that cryptocurrencies will be reactive to monetary policy that will not be due to effectively innovation or working our way out or producing our way out, which is a much harder, much longer road, but simply printing our way out or controlling our way out. And in light of yesterday's price action, Good Alexander said, another day, another animal spirits rotation out of things the government can seize into things that you can leave the country with. So there is the table set. The idea of capital controls is spooking the markets. It's driving people to buy the heck out of gold. And more importantly, we're finally seeing people start to jump into Bitcoin, not because it could be potentially a higher beta version of the stock market, but because it's this intangible asset that you can put in your suitcase and move your net worth from one place to the other completely undetected. So let's start to understand the big question. What are capital controls? And what might they look like if they come into effect? And what would be the impact of these capital controls on things like stocks, things like gold, things like Bitcoin, and cryptocurrency? Now, mind you, we are at a time of incredibly rapid change. This is a time to be intellectually curious, to be pushing your own boundaries, to be pushing your own understandings of how the system works, and to be rapidly growing your skills to deal with whatever comes around the next curve. I don't think anyone is both an AI expert, a macro expert, a capital controls expert, a tariff expert, a trade expert. No, what matters is your ability to learn about these systems very rapidly, to understand them, and then to plan for them. We are spoiled with being able to learn from the best and brightest minds on the internet here on X, as well as having literal artificial intelligence to stand on to learn these financial concepts at light speed, things that our prior generations would never have had access to. One of the comments I find the funniest is when people say, hey, you're a crypto guy, you shouldn't be talking about XYZ. Well, obviously, capital controls, macroeconomics, policy, tariffs, trade, all of these things are impacting our investments. And you'd be a fool not to be doing every bit of research you can and learning. And I highly encourage you to do so because there's nothing stopping you. So first and foremost, what are capital controls? You can think of these as new rules that will affect how people can actually trade or where money can flow. These can come in many forms, such as new tax rules for foreign governments, or most importantly, limiting the flow of US dollars both in and out of the country. Limiting, for example, how much US citizens could invest in China or how much China can invest in the United States. The United States doesn't have rules like this. It's pretty much an open capital account, which is part of the way that the US has circulated dollars around the world, is that you can use them freely, both in and out of the country. But capital controls might totally change that. And in fact, it would put in jeopardy the status of the US dollar as the global reserve currency. That's for sure. Because if you can't freely use your dollars, why would you want to have them? Why would you want to earn them? Now, on a general level, you understand controlling capital is one thing, but what might these look like under the Trump administration? Well, under Trump's administration, it might actually make sense that they would be taxing or putting some restrictions on the trade between the US dollar and the Chinese yuan. It also would make a ton of sense to limit the amount of money coming in from China or going out to China. This could also be applied to other trading partners like the EU. And the final example, something that I've been bringing up for a while, is they could force foreign currencies to be invested into US debt. Remember, we've been talking about the United States essentially jockeying to lower its interest rates. And one way to do that is to force your trading partners to buy your debt. If you can't do it with the carrot, you might have to do it with the stick. And that's where capital controls could become a forceful innovation from the United States instead of a voluntary one. Now, first and foremost, we literally directly saw Trump reference gold. So in understanding how this would affect gold, we can assume that it would be pretty impactful. It makes it seem like gold is effectively the biggest and most important asset to control in this global trade war, especially if there's increased costs of getting from dollars into yuan. That would make the outside or hard money of gold far more attractive to actually save in because those costs would not be able to be controlled by the US government. This would have a direct impact on stimulating demand for gold. And it's no surprise why gold has been pumping like crazy. Maybe, just maybe, there have been whispers of this happening in the background, or people are just preparing for the worst. Now, the picture is not so pretty when it comes to US equities. Again, US equities are completely controlled by these tariffs. Their actual import and export costs might soar astronomically. Their cost of labor, all of the underlying fundamentals of businesses that are traded on the stock market might actually suffer because of this. And then you add add in distrust in general to the United States because of the erratic nature of its policies, and you get a recipe for an absolutely disastrous performance in major equities in the United States. While this is likely temporary, it's important to understand that this is not good for the United States equities, things like the Magnificent Seven, the S&P 500, the NASDAQ. These are things that are prime targets to suffer under our regime of capital controls. Now, finally, let's talk about crypto, because this is where Bitcoin and crypto can truly soar. The opportunity to see Bitcoin not as just a more risky investment against the stock market, but actually a way to transport value around the world in a way that can't be tariffed, can't be censored, and is permissionless, can be easily transported. All of those characteristics now become incredibly valuable, especially as capital flight starts to reach a fear or an emotional phase. It's not unlikely that Bitcoin, in a world of capital controls, becomes extremely desirable and will likely perform even better than gold. Finally, when it comes to altcoins, those are performing more to money printing and other types of risk-on behavior. Certainly at the beginning, in the fear stage, this would not necessarily go directly into altcoins. But long-term, if people realize that Bitcoin is the true safe haven and that crypto are effectively the economic rails of the future, it's not unlikely that altcoins will start to once again become a higher beta, higher performance version of Bitcoin, with a premium being attached to the value specifically around things like DeFi and hardcore financial utilities. Things that are permissionless, truly on-chain, truly non-upgradable, and censorship resistant will be at the front of the line of assets that could receive dramatic valuation bumps in this world. In short, capital controls would raise the cost of money. That would hammer equities, but it would likely lend itself to a massive uptick in valuations for things like gold and then Bitcoin. As Bitcoin becomes solidified as a safe haven narrative, things like on-chain primitives in DeFi and other sectors would start to go bananas, and we would likely see benefits of the Bitcoin bull run flow into other sectors of crypto. But this might also have a pretty intense strain on the local economy. There would be a huge credit crunch and strains on the banking infrastructure, especially local and regional banks. Supply chains and manufacturing would come under severe stress. Consumer spending would likely shrink dramatically, and small businesses would be in deep trouble. And local governments might experience some serious fiscal stress due to tax revenue declines as well as higher infrastructure costs. Again, if these things happen, the tail risks include civil unrest, bank runs, and all the things that Bitcoin is effectively designed to be your hedge against. Remember, Bitcoin is not fractionally reserved, whereas your deposits at the bank are not really held there. It's important to realize the United States has not imposed capital controls since the early 1970s. So this is very much historic. And for many of us watching this, based at least on the YouTube analytics, this will be the first time in our lifetimes that we will ever experience it. Again, if it happens. So with some of the smartest people on crypto talking about capital controls, should you be worried? Well, I want to be clear. The things that are stopping capital controls from going forward are probably Scott Bessent and Jerome Powell at the Fed. The best case scenario here is that we reach a trade deal in Q2 and we don't need to enact any of these more extreme measures. But it's also important to realize that if the idea of capital controls starts to become discussed in a more concrete way, and if there's any indication that Jerome Powell is going to be able to be pushed out of his position, if these things start taking shape, it's very likely that we might see the eruption of gold and Bitcoin as a safe haven narrative, and we'd see a total shift of investment behaviors in the mainstream stock market. And so with Bitcoin still stuck in its range, I think that there's incredible value in continuing to dollar cost average throughout this range. Again, we were lucky enough to get some buys in down here, but I do think as Bitcoin potentially revisits this diagonal, which I totally think is possible, and creates some more price history as it creates newer, higher highs throughout this range, that would be an amazing signal that it's time to keep adding Bitcoin. In fact, I think throughout this time of uncertainty, things like gold and Bitcoin are extremely desirable, because once it's obvious that your capital is trapped and you need to get it out, it might simply be too late.
We can just put that into your retirement account and make it go to work for you, and it's gone.
So during this period, I'm going to continue adding to Bitcoin methodically, especially as it revisits range lows or bounces off key lines like this diagonal support that has been in place since the inauguration. I also think during this time, understanding the types of coins, the types of assets that will actually perform even better during these times of uncertainty, during times of capital controls, are a very valuable thought experiment. I also think that in general, if the crypto economy becomes the focus of the world, a world that is now being deglobalized, that has tons of friction in getting money and goods across the world, well, the concepts of crypto that can't be seized, that can't be taxed, that can't be tariffed, that are permissionless, become extremely exciting. And once again, the key narratives within this space will start to catch fire. And investing in the future of, for example, AI within crypto, it might become a much more exciting and much more profitable endeavor than investing on the equity side. As always, I hope you guys enjoyed this video. If you did, make sure to smash that like button as it always helps the algorithm, and leave a comment below. We'll be trying to do our best to dig into these concepts of this rapidly changing world and how it affects our beloved Bitcoin and cryptocurrencies, as we are living through absolutely historic times. And during historic times, there is unprecedented levels of opportunity. It's time to keep your head on a swivel and to constantly evaluate the next moves in the economy. And if you want to be one step ahead, make sure to subscribe to this channel, as we'll be doing our best to keep you up to date and ahead of the curve. As always, if you enjoyed this video, make sure to click on this one popping up right now.